I want to thank Ginny for her presentation and certainly compliment Ellen on the work she is doing and bringing that to our faculty assembly. As Ginny talked about, it's been an interesting year of change. We began this academic year, you may all recall, gathering here in faculty assembly on August 26th, 2008. It was a time of great anticipation, great excitement, with warm welcomes to those who are new to our community, heartfelt recognition for those who had served us for 25 years. We now close this academic year, a time to celebrate the achievements, to measure our progress as truly one of the world's greatest universities with a mission rare in its scope and importance. I appreciate this opportunity to speak to you about Vanderbilt and to thank you for your incredible devotion to our university. When I spoke to you in the fall, I closed with a pledge to work on your behalf and on behalf of the university. I tried, as best I could, to capture what are the most basic responsibilities of having the privilege to be both your faculty colleague and serve as your chancellor. I advanced the view that as chancellor, quote, I must steward the university financially, protect it from undue risk, and ensure its good reputation. There were other matters I noted and to which I devote my time to in our work together. But for me, last August, these tasks of financial stewardship, protection against risk, and ensuring our good reputation are the core of my job. Within 1 month of our last assembly, and these words to you, our nation and our world plunged into an economic and financial crisis of historic magnitude. This was no ordinary economic cyclical slowdown or the naturally occurring creative destruction that some believe moves through systems of free trade and free market capitalism. This was a sudden, severe, and frightening economic and financial panic. There were moments on the precipice as almost everyone, including, yes, university chancellors and presidents, feared a wholesale meltdown of financial and credit markets. Historic banking houses and blue-chip companies began to collapse under the weight of leverage and the total freezing of access to capital. Bear Stearns, Lehman Brothers, Countrywide, Wachovia Bank, Washington Mutual, and other financial giants literally collapsed overnight, or they were merged into weak institutions that to this day continue to be propped up by billions of dollars of federal funds. The American auto industry teeters on the brink of total collapse and bankruptcy, saved only by the intervention of the national government and the federal purse. Statistics cannot possibly capture the swift carnage nor the financial hardship and pain that now affects millions of Americans and those around the globe. Yet they were jarring and they continue to be. After years of unemployment rates below 5%, the rate has climbed swiftly to 8.5%, the highest since the early 1980s and affecting every state. There's been an almost 100% increase in what the Department of Labor characterizes as mass layoffs. In the second half of 2008, the gross domestic product dropped 6.8%. Home prices and sales, engines for the economy, a major source of household wealth and leverage, plunged. In the second half of 2008, investments in residential real estate dropped 38%. Prices plunged to record levels. In October 2008, home prices dropped 18% in 1 month. Average prices are now down 26%. No state in the nation has escaped this decline. The measure of consumer confidence fell from 60 on a scale of 100 to 37% in 1 month. It plunged further to 25 and now sits at 26.3, the lowest in decades. For investors large and small, the stock market was wrenching, and literally trillions of dollars in savings and retirement funds vanished almost overnight. When I spoke to you in August, the Standard & Poor's 500 was at 1272. 1 month later, it stood at 1164, down about 8.5%. Painful. But 1 month later, it stood at 800, a drop of 31%. Only 6 weeks ago, it was at 677, a drop of another 15%. In total, the Standard & Poor's index lost 47% from the fall to our return from spring break. In more real terms, like many of you, I have hitched my retirement days to the CREF Stock Fund. When we met in August, that fund's shares were at $226. At spring break, they were $120, a precipitous drop of 47%. Comparisons to the Great Depression and fears of another are discussed by many thoughtful people who are not ordinarily prone to hyperbole. As if to deepen the parallels, uncertainties, and fears, America was engaged in the election of a president. Yet this was no ordinary election. Financial panic and 2 wars were ongoing. And America was now immersed in an election where the most divisive and painful part of our legacy, race, was squarely at issue. We looked on from the quiet beauty of our campus with the nation and the world. To be sure, those of us classified as baby boomers, while not children of the Great Depression, nor members of that World War II greatest generation, had seen and lived through financial and political instability. In my professional life, which began shortly after the Vietnam War and Watergate, and as we were still moving through the Civil Rights Revolution, I've seen America face enormous financial challenges and disruption, but it always moved forward. We lived through the 1970s and 1980s, witnessed hyperinflation and stagflation, where getting a 12% mortgage was thought to be a bargain. The Rust Belt recession of the early 1980s and the wringing out of hyperinflation by Paul Volcker, the chair of the Federal Reserve Board, produced unemployment of over 10%, the highest since the Great Depression. In the late 1980s and early 1990s, the American banking system and savings and loan industry went bankrupt, requiring at that time the mammoth expenditure of about $200 billion to recapitalize the system. Oh, for those good old days. The 1990s saw a large run-up in equity prices, with the party ending in the bursting of a tech bubble, returning many recent college graduates and day traders back down to earth to earn ordinary income and not expecting that their first job out of college would make them rich in 5 years. Unfortunately, no sooner had we recovered from the bursting of this technology bubble than America was attacked on 9/11. Another painful recession followed, as did 2 wars, which are still ongoing as we gather. Yes, in our lives, in our careers, we have seen war, recession, and terrible financial disruption. Yet what we faced this year was unprecedented in its pace and complexity. The amount of speculation, leverage, and international interconnectedness of our systems made them more fragile and subject to massive system failure. A large airline is faster and much more comfortable than a horse-drawn carriage, but the most minor and unexpected system failure can cause massive and catastrophic results. So too, the so-called maturation and innovation of global capitalism produced many advances and opportunities beyond a world frozen in Cold War politics and the threat of mutual assured destruction. Yet our new systems carried with them risks and dangers, and despite assertions that there was an efficiently leveraged and perfectly hedged global financial system, we now know that there were embedded within large risks and cascading weaknesses. When problems arose, the worst threats to functioning financial markets were revealed. Financial engineering cannot eliminate all risk, nor can it take fully into account that most unpredictable of market factors, human behavior and psychology. What we learned in all of this, and what makes our current situation most of concern, is that people lost trust and lost confidence in each other and the systems that were built. With no trust, with no confidence, the system has almost ground to a screeching halt. Lending to and by banks to other financial institutions, even on an overnight basis, froze, and we're now only seeing some thaw. The only safe haven to be found was in the Treasury securities of the United States. Despite the concerns about printing of dollars, these Treasury bills, short-term debt instruments in the United States, were in such high demand that interest rates on them turned negative. In other words, to ensure the safety of their money, investors said, I will lend the United States $1 and they will pay me back 99 cents. Cash was king, trust was gone, and we learned sadly, and in the most basic way, that under our social contract, the United States was the lender of last resort, moral hazard or not. I've always chuckled and even grown impatient with those who insist that universities are ivory towers, removed from everyday life. They are anything but. And this financial panic ripped through American education and its universities with great speed and brutal force. I knew of the impact this would have on our endowment, the leverage on our balance sheet, the compelling need to finish construction of a number of key medical school hospital facilities on and off the campus. I also knew of our commitments to support our current and future students, to support and enhance our faculty, and to support, reward, and cherish our staff, particularly those who are most in need. As this occurred, as we faced our challenges, I assessed the work we faced, and I looked for guidance, for reassurances in many corners. I thought immediately of our peers. How were they faring? Vanderbilt's an old, historic institution, yet many of our peers far older and I dare say much wealthier. We must chart our own path, but I was keenly interested in how and if they were being affected. The public reports, the confidential conversation I was having with other chancellors and presidents, and the inevitable leaks and rumors were jolting. Stories of large cuts in academic and administrative budgets, freezing of all capital projects, halting of large unfinished projects, large layoffs, hiring freezes, early retirement, and other drastic and immediate steps were in the news. And to my great concern, this was happening at the wealthiest of our peers, including Harvard, Stanford, and others. These sudden and drastic steps to cut costs are unheard of in our world, much less the stuff of these wealthy and great institutions. Worse, the drastic measures were taken because of a steady and frightening series of news reports and rumors about various university endowments losing more than 30%, 40%, 50% of value, with far larger losses expected perhaps. Philanthropy was plunging. Rumors spread. University X has run out of cash. They just borrowed $2 billion to get emergency funding. For me, and I think for many, there was no relief. Little hope nor solace when we saw the greatest, and indeed wealthiest of America's universities reacting to this downturn as if they were indeed General Motors, but without the government backstop. With no hope coming from our peers, I knew this downturn would be historic. Hence, I sought guidance, perhaps some perspective, in looking at how did Vanderbilt make it through historic crises? This isn't our first. I particularly thought of the second and probably our greatest chancellor, James Hampton Kirkland, serving from, yes, 1893 to 1937. He stewarded Vanderbilt through the Great War and the years of the Great Depression, not to mention the painful and litigious split with our founding church partners and the destruction of Kirkland Hall in a raging fire. Digging through the Vanderbilt archives, I read his annual academic and financial reports, hoping that in these, I and others might find some hints, some clues, or guidance for how could we travel through these times of challenge. Writing and reporting in 1920, after the destruction of World War I, he wrote of disillusioned returning soldiers and the effects of the labor shortage caused by the opening of munitions plants during the war. But enrollment was booming in the post-war years, with the campus filled with over 1,000 students. When I looked to the financial challenges, they were there. Yet what surprised me was the almost charming and quaint size and simplicity of our Vanderbilt at this time of challenge. He discussed with great concern the mounting costs of deferred maintenance, and he demanded to the board that another $15,000 be allocated in the budget to address that problem. He insisted that our chemistry laboratories were substandard. They needed major renovation at the extravagant cost of $8,000 to $10,000. The total budget for the university was $312,000. The faculty salary budget was $80,000. He even forecast a robust surplus of $4,000. We had no debt. Our endowment was about $4 million, consisting almost entirely of railroad bonds. Each issue, its coupon rate and duration was listed individually in the report. I then plunged into the reports from 1929 to 1932 as the great market crash and the Depression set in. I was surprised, however, with the initial steady-as-it-goes tone and substance of the early reports. On June 11, 1930, Chancellor Kirkland discussed the crisis precipitated not by the Great Depression, but by the sudden death of the law dean, the distinguished John Bell Keble. He stated that no matters of great importance had been addressed by him and the trustees through the year. The endowment was strong, but he was seeing some evidence of late pledge payments on gifts. In his June 1931 report, 1 year later, he began by noting that, quote, the year just ended has been in most respects a normal one, unquote. But the report then continued in a cautionary tone. He stated, we were in a Great Depression. The effects were being felt by Vanderbilt and other great universities. He observed there was more demand for scholarships, for loan funds for students. Gifts were slowing down, and yes, pledge payments were lagging even more. He was more optimistic about the endowment, though. He said that the bonds he held were still paying interest, but he expressed great concern about the impact of larger economic forces on the investments of the university. By 1932, the problems are mounting. He proudly noted, however, that the university would show an operating surplus and that neither large layoffs nor deep salary cuts for faculty were yet being done. However, the tone becomes more somber in the very next year, 1933. He has halted all capital projects and even ordinary repairs. Enrollment was now down, and many students could not afford to continue in college. Wage cuts were put in place, but not yet for faculty. He described the latter as a deplorable hardship and added, this step should be taken only as a last resort. On a positive note, he said the university was without any serious debts, cautioning that debts are hard to pay. They stop all progress. But seeing no light at the end of the tunnel, he said, quote, it is not well to risk too much on the hopes of future business improvement. It would be very easy to have a still further decline in income through a defaulting securities or the reductions in tuition. These were lean and challenging years, and Vanderbilt met those challenges. In these years, Chancellor Kirkland and Vanderbilt still were very much focused on that which we embrace today as our core mission: teaching, caring, discovering, and curing. Our world and our challenges were indeed similar: a financial panic, sudden and painful drop in securities markets, and a fear that students and their families could not meet the cost of attendance. While this affirmed my strong belief that, yes, we would emerge stronger from this current recession, I wondered about the vast differences between the Vanderbilt of 1932 and the Vanderbilt of 2009. Would that make it impossible, more difficult, more challenging, or disruptive? In 1932, there were roughly 250 faculty at professorial rank. Our faculty stands at about 3,000 full-time faculty today. We currently have about 22,000 employees, yet going through these reports in the Great Depression, it is hard to see the university having more than 600 employees. Total enrollment stood at 1,500. It is now over 12,000. The total budget in 1932 was $1.5 million. This year, our budget will be about $3.4 billion. The endowment was valued at $20 million. Today stands as about $3 billion. In 1932, bonds and railroads and utilities constituted a large bulk of the endowment. Although in this time you started to see some of the high-flying stocks being shown as held by Vanderbilt: General Motors, American Telephone and Telegraph, and the General Electric Company. Today our endowment is with 135 managers. It is invested in over 80 countries on 6 continents, deploying a variety of investment vehicles and strategies. For me, the startling differences in size and numbers rendered the earlier days of little relief or immediate comfort. History had dramatically changed the funding of the American Research University. While Social Security and FDIC insurance would soon be enacted, Kirkland and Vanderbilt could not possibly have contemplated the tremendous discoveries and breakthroughs on our campus and at the other great universities, and the large and supportive role that the national government would play in university life. The creation of the NIH, NSF, the GI Bill, the adoption of Medicare, Medicaid, and other significant funding by other federal agencies that bolster and fill university budgets and support our core mission was simply not on their mind in 1932. The growth of these programs, wonderful as they are, carry risks that are new. The great American Research University has become an engine of great progress and a beneficiary of federal science, health, and fiscal policy. But sovereign risk and fiscal risk loom like no time in the past. No doubt the 1930s saw its share of failures and certainly scoundrels, but the size and interdependence of our current world simply does not allow for great comfort. In our world in the fall, as each shoe dropped, we faced questions and the need for reassuring answers. Did we have counterparty risk with Lehman Brothers? Did we hold custodial funds at Bear Stearns? Were we invested with Bernie Madoff? Fortunately, the answer each time was no. As I reflected on that great university Kirkland led, and which we are now privileged to call our university, I did at times, however, wish for the old days. Compared to this large and complex institution, Vanderbilt then was both academic powerhouse and quaint small village. I thought of Chancellor Kirkland's ability to call a true town hall meeting, his ease to call everybody together, to say, we're like a family. We'll make it through all of this. For all the miracles of emailing, twittering, texting, haven't we outgrown this ability to look at each other, pledge ourselves to our mission, and assure that we all will share sacrifice to protect Vanderbilt and to protect each other, particularly those most vulnerable and in need. Yet as year went on and our large and complex university faced these challenges and created the means to do so, we saw in our work unique institutional values and qualities, particularly those intangibles that to me have always been distinctly Vanderbilt. I realized it was these qualities, nurtured at work in Kirkland's times perhaps, that would enable Vanderbilt to survive and thrive perhaps in these times of great challenge. I became convinced that regardless of the growth, the complexity, the size of our university, at its core, we are still a community who cannot physically, but can metaphorically come together to agree on shared sacrifice, on prudence, and devotion to our mission. As the year progressed, it was obvious to me that this would not be the year of simply avoiding failure or catastrophe. It would be about continuation and success in our mission. It is three enduring principles that we have that continue and will guide us through this time of challenge. First, as in Kirkland's time, we are one university, not only intellectually, academically, but financially. The great name Vanderbilt and all of its resources stands behind each and every one of you and each school, center, clinic, and hospital. Our future successes, particularly in the necessary transformation of healthcare, will be found in continuing the deep and meaningful academic partnerships. But the notion of one university, a redundancy, since una means one or whole, is equally important in fiscal matters. We stand or fall together, academically and financially. There are no silos or tubs, particularly when leaks spring. And I hope this year has shown in clear fashion that when financial crises or challenges are upon us, let's go forward together. This is a strength, and our efforts to divide, isolate, or build silos will prove to be fruitless and has proven to be expensive. Second, we are a very special community. We're over 22,000 faculty and staff and over 12,000 students. As numbers increase and interests diverge, theory may tell us that acts of self-interest may increase and kindness and reciprocity will decline. It is one thing to expect reciprocal kindness in the family meeting of all in Chancellor Kirkland's parlor. But can that occur in these larger groups with so much diversity, with so little chance for perhaps repeat and meaningful interaction among all of us? I have never worried about the loss of this cherished community in my 22 years at Vanderbilt, but as we headed into this downturn, this time of scarcity, this time of sacrifice, I hoped for but wondered about our ability to cohere around values and forge a caring consensus. How could we make it through all of this and avoid for now the large and painful layoffs we were seeing elsewhere and that Ginny noted? How could we right our financial ship, improve our balance sheet, reduce risk without someone trying to extract from a panicked borrower a wealthy lender's bounteous interest? How could we assure our students and families that yes, we could keep good on our promise for improved financial aid? How could we assure that those, so many of you, of great merit, felt valued, felt important, but yet not spend in a way that might force others to lose their job and the benefits associated that can often mean the difference between life and death? These were issues I pondered that weighed on me and you and many others, and they seemed insoluble when we looked at other universities and the steps they were taking. But as these matters were posed and so-called Hobson's choices seemed inevitable, our community, our faculty led by action and example. Starting from the basic premise that we must all do what we can to minimize hardship and take all steps to avoid large layoff, the faculty engaged each other, their deans, the provost, and me on steps that should be taken. It started out with individual faculty advising me and others that I will forego a stipend this year to help out, or I'm very well paid. I don't need a raise this year. Many faculty and top administrators insisted that to award raises would be profligate and careless, and some others insisted that administrators take pay cuts. I was informed that the faculty members in the College of Arts and Science, in the School of Medicine, and across this campus were discussing, was a raise the right thing to do? Don't we need to protect others to avoid the layoffs and not cut back on our core mission? As we went into our budgeting, it was clear to me that shared sacrifice, a caring for all, and a strong desire to buttress our financial strength were messages that needed to be translated into budgeting principles. So we are indeed one university. No, let me remove the redundancy and say we are a university. And we care deeply about the person who is our colleague in our lab, in the office next door, but across the university, in an entirely distant department or school. These are cherished values, and they are a source of strength and hope for you, for everyone here, and certainly for me. But there is another important quality that became clear as we navigated through this year and managed to remain strong and have great success. Universities are very decentralized institutions. Increased specialization, disciplinary focus and differences, the independent spirit found in all who work here, particularly in us, the faculty, contribute to a natural resistance to overly ambitious strategic planning. We have been different. Over the past 10 years, through investments in capital, faculty, and new centers, we have charted strategies that focus on our strengths, our unique assets, and culture. Thus, with ever-increasing pace, we took a number of bold steps and invested wisely to enhance our greatness, excellence, distinction, and visibility. These investments, as we face a time of prudence and leanness, now provide the foundation for future successes and allow for new investments to produce even greater distinction and greater human good. Our first academic venture capital fund, our new freshman commons, our enhanced financial aid for undergraduates and graduate students, our new Monroe Carroll Jr. Children's Hospital, a world-class Vanderbilt Ingram Cancer Center, the opening of MRB3, the opening of MRB4, our exciting expansion at 100 Oaks, our new important hospital critical care tower set to open the fall of 2009, our leadership in healthcare disparities and personalized medicine. All of these investments, including hundreds of millions of dollars of philanthropy from our trustees and others, have positioned us well. We have built our human capital and infrastructure wisely and aggressively. Sadly, others may not have done so before, and unfortunately, they cannot do so now. So for this reason, we have so much to celebrate and acknowledge. We had a record number of applications, as Ginny mentioned, for the undergraduate experience. Over 19,000 applications, a 50% increase in the last 2 years, an admissions rate of 18%, one of the most competitive in the nation. Within that large and talented group of applicants and those accepted, there will be found large increases in diversity as measured along every relevant axis. This trend is paralleled in our other schools. In the graduate and professional school, applications are at record highs. And last year we graduated 250 PhDs, a record number and an important indicator for meeting our aspirations. Our research funding is running very strong, despite the horrible and penurious pre-stimulus federal attitude toward funding innovation and leadership in science and discovery. Our hospitals are full, as we say, they are on diversion. Our reputation for great care, animated by compassion and discovery, has never been stronger locally and nationally. As we faced severe financial and economic stress and volatility throughout the fall, we managed to reduce substantially the risk to our balance sheet, and at each turn held our AA bond rating. As Ginny mentioned, one does not often celebrate a 16% decline in your investments, but where our peers report being down 30% or more, with averages over 20%, we are very proud of these results. Finally, despite these very hard times, those who still have resource, who want to make a difference, and do so very generously, continue to do so. To date, our philanthropy is up 15%, and we are ahead of schedule on our $1.75 billion Shape the Future campaign. At the same time, it's because of this sense of community and sacrifice that we can not only take steps to care for each other, but continue to make wise and important strategic investments. We have eliminated all loans for our undergraduates. We have begun the process of reviewing applications for our IDEAS program, our $50 million investment in trans-institutional initiatives. We have, unlike many of our peers, been active and strategic in our faculty hiring. Even at this late date in the year, we are continuing to recruit actively in many areas, significantly in the important fields of the social sciences and medicine and Islamic studies. I am particularly pleased and proud to see that you, along with the deans and the provost, have recognized that diversity and excellence go hand in hand. The provost advises me that over the past 5 years, 47% of our new hires have been women, and 24% are faculty of colors. In this time of extraordinary financial disruption and uncertainty, one thing remained true and affirming. Our faculty are the lifeblood of the institution. So many prizes have been earned this year, so many fellowships, and so much distinction has been showered on members of our faculty. Let me mention just a few. Ellen Fanning in biological sciences and Tom Weller received Humboldt Research Awards. Teresa Gaddu in English and Marshall Aiken received Fulbright Awards. Tony Lurley's novel, The Blue Star, was reviewed extensively, including the cover of the New York Times Sunday Book Review, and was selected by USA Today as one of the top 10 books of 2008. And his colleague poet, Rick Hillis, received the prestigious Whiting Writers Award given annually to the nation's most distinguished writers. Jesse Peterson in mathematics was awarded an Alfred P. Sloan Fellowship. Peter Cummings from engineering was elected a fellow of the American Institute of Chemical Engineering. Camilla Bembo was awarded, the dean of the Peabody School, was awarded the Distinguished Alumna Award by Johns Hopkins University. Gary Silikowski in chemistry, Michael Waterman, chair of biochemistry, Dan Liebler, director of the Ayers Institute, and Charles Sanders of biochemistry were elected as fellows to the American Association for Advancement of Science. Jeff Balzer, dean of medicine, and Kathy Edwards, professor of pediatrics, were elected to the Institute of Medicine of the National Academy of Sciences. Jerry Hickson received the Vanguard Award for the advancement of patient safety from the Doctors Company Foundation. David Wasserman in molecular physiology and biophysics received the prestigious Merit Award from NIH. And let me close by saying that our caring and distinguished chair and professor of preventive medicine, Bill Schaffner, just received the James D. Bruce Award from the American College of Physicians for his enormous contributions to promoting prevention and public health. We have achieved much in the past year despite the challenges and the uncertainty we still face. In the fall, we all joined in affirming the success of Vanderbilt is not simply the byproduct of our individual interests, but instead why we come to work every day. This is a year where this guiding principle, I believe, proved its power. So what do we see ahead? Of course, for us, it's clear. The grading of final examinations and papers, the closure of commencement, caring for patients and their families must continue. For many, especially for those who are awarded fellowships, study, inquiry, and perhaps even travel and research will intensify as our campus empties of students. From this vantage point, I think all of you feel privileged by the certainty of the academic calendar and the passion for our work. But for the broader community and our economy, we hope for change, for better days for all locally and globally who suffer the pain and dislocation of this financial and economic storm. I am no market guru or pundit. We certainly have enough of them, and one must wonder where they were with their oracular skills over the past several years. So we must continue to be devoted to our mission, thankful that we are managing to thrive in a time of great stress, and yet be very prudent and cautious in caring for and stewarding the finances of our university. We are very strong and sound financially, but taking on large amount of new debt is neither prudent nor wise. The financial markets in our economy, nationally and globally, remain dangerous, uncertain. Unemployment, which unfortunately often means no access to health insurance, remains a national problem that demands national solutions. Unfortunately, Congress does not move at the pace or always in a direction that suits either our fiscal year or our fiscal health. If I, and hopefully we, have learned anything in this maelstrom, it is first, if it is too good to be true, it is not true. Second, predictions based on averages are just that. Assumptions based on averages often overlook that at times regression to the mean arises swiftly and suddenly. Fiscal and structural problems pervade our nation's financial system and necessarily our federal government and its own financial house. One cannot predict when recovery occurs, the cost of the recovery, or indeed the fashion or time at which these costs will be fully incurred. There are, however, for Vanderbilt and others deeply devoted to the miracles that come through education, signs of hope and foresight in national circles. The stimulus, the proposed budget, for all the many critics and shortcomings, does embrace a basic and an enduring axiom. The American dream may often run down Main Street. It may even lead to Wall Street, but it always runs down University Avenue or College Boulevard. America's welfare, its health, its social fabric, its global competitiveness, its respect rest on that most empowering and ennobling of our calling, of all calling, education and the innovation and discovery that is found at the great American University. It's been a year of many achievements, of children cured, students, yes, enlightened, discoveries made, but it has been a year of enormous strain and uncertainty. Let us look forward to continuing our noble work, to continue to care, to sacrifice for each other, and to be thankful that we are able to pursue our passions at this, as faculty, at this special place we call Vanderbilt. Thank you for all that you do. Reception. There's a reception to follow. It's got fish sticks and Velveeta.